This is the Haulin Assets podcast, where we'll show you how to go from employee truck driver to savvy business owner. And we'll do it together because we're starting our own trucking company, Haulin Assets, so you'll get a front row seat through the whole process. Together with some experts in the field, we'll teach you how to set up a business, buy a truck, get your DOT and MC numbers, get insurance, and a lot more. Thanks for joining us. Welcome everybody to Haulin Assets. This is episode 18. I am Craig Hanks, your host, and over there with the silky smooth voice.
It's Chris, the face for radio.
Something like that. Well, it's a beard for radio anyway. All right, so today, Chris, we are going to be covering what to do with the profit that we talked about in the last episode. So if somebody is just joining Haulin Assets, or if you skipped episode 17 for some reason, go back and listen to it.
I think it'd be a good idea to listen to 17 before you listen to this one.
Absolutely vital. You can find all of our episodes at haulinassetsllc.com. You can check out full show notes. You can follow along with the notes that we have, especially for an episode like number 17. Today, we're going to be continuing on with our discussion of that profit and loss statement and what to do with the profit, or loss, I guess. We could talk about that too. But we're going to be talking about...
we don't have to.
Oh, well, yeah, thank goodness. Thank goodness for your numbers.
Keep our fingers crossed.
So that is today's topic. Now, look, there's have you heard of TLDR?
I don't think so.
Too long didn't read. It's an internet thing, right? So the TLDR for this episode is have fun in Vegas, everybody. As soon as you make some profits, just head down, hit the slots. You'll be fine.
Yeah, I don't think that'd be a good idea.
Oh,
I was actually in Las Vegas this morning.
Oh, yeah?
Yeah.
Driving back from Vegas today?
I dropped off a part of a load in Las Vegas and dropping the rest off actually tomorrow morning here in Salt Lake.
Speaking of which, before we get to our topic at hand, how are things going out on the road? Anything interesting happen in the last week or two?
Yeah. So actually on this trip, something kind of interesting happened. So this load that I'm on right now, I picked up in Virginia, kind of right on the border of Virginia and North Carolina, and then, headed back to Vegas. So I was going west on I-40 forever. And a couple days ago, we're right to the point where Hurricane, is it Dorian? Is that how you say it? I think it's Dorian. Is not too far away from hitting landfall. And no joke, one day in about a 5-hour stretch, and this is no exaggeration, this may be even understating, I bet in a 5-hour period, I passed 500 of the big trucks that repair electrical lines, all headed east.
Wow.
They must be pre-staging, getting ready to fix all the power lines that go down when the hurricane hits landfall. It's kind of like, it was literally like every couple of minutes, a group of 5 or a group of 10 of them would just be passing, heading east, like every couple minutes. Like it was nuts how many of them were.
So I guess the municipalities there must contract with, out of state.
Or a FEMA thing or something.
It could be.
Yeah, there was a whole crap load of them.
So as an owner operator, a sole one truck operation, would you ever have an opportunity to caravan like that with other drivers? Would you ever have a reason to?
I don't know that you necessarily have a reason to, but they would, like FEMA things like that. You can get on those FEMA contracts when, they're responding to a natural disaster or things like that. Any size trucking company can do it.
Okay. Gosh, anything else to share from the road before we get started?
Let's jump into it.
Okay. Well, let's talk about money. Chris, this is my favorite subject. It's everyone's favorite subject, quite frankly. So tell me a little bit about, set up our discussion today about what to do with your profits.
Okay, so before we get right into the meat and potatoes of this discussion, I want to use a story to relate to, what I think is probably one of the most important episodes one of the most important things you can do in a trucking company. And I really feel like this particular episode is probably one of the most important that you need to listen to and really learn and understand the principles that we're going to talk about in this. So,
at a certain point, our listeners are going to stop believing us.
Do we say that every time?
Do I say that every time? At least 50% of our episodes.
I think I'm pretty important, and I think everything I say is pretty important.
Oh, well, that's clear.
Just ask my wife.
Okay. Yeah. No, that's fine.
Anyway, so I want to start off with a study that a Stanford professor named Walter Mischel did back in the 1960s, 70s. And it's a really popular study, really interesting. It's called the marshmallow effect. And basically what he did is he took kids that were between the ages of about 4 and 6 years old. He would sit them in a room by themselves and give them a set of instructions. And basically what he would do is he'd put a plate in front of them with one of those big marshmallows. You know, those marshmallows that you'd shove in your mouth and get all sticky when you were a kid?
When I was a kid, right.
Still? Yeah. I can see that in you. Anyway, what he would do is he'd give them instructions that he'd give them that one marshmallow, set it down in front of them, and he would tell them that if they would not, they could either eat that marshmallow right then, or if they would wait 15 minutes, he would let them eat that marshmallow and give them a second marshmallow. And so then what they would do is they'd leave the room, and then, they have cameras in the room, and they'd watch, and they'd wait for 15 minutes and see, which of those kids would eat the marshmallow and which of them would kind of have the self-discipline to wait and get that second marshmallow so they could have two. And if you ever want to entertain yourself, people have tried to replicate that or have replicated that experience. You can go on YouTube and watch days worth of kids trying not to eat marshmallows, licking them, taking little tiny bites out of them. It's pretty hilarious.
We've replicated this in my home. I've got 2 kids, and it's a thing.
It is. It's a good thing. So anyway, what they ended up doing with that study, they followed those kids throughout their lives, and they found that the kids who resisted that second marshmallow were much more successful later on in life in a lot of different ways. And one of the biggest ways is they had a tendency to score higher SAT scores and, a lot of things. And so it's, being able to have that temptation to resist that instant gratification for something bigger and better down the road is really a big thing in life.
Yeah, and I think the lesson here would be clear. What you're getting at for our listeners would be delayed gratification, right? Is that what we're going for?
Delayed gratification and really waiting, making a sacrifice or putting off a pleasure right now for something even bigger and better in the future. And so basically, I've made a little bit of profit. And so what do I have in front of me right now? I've got that one marshmallow. I've got a marshmallow. I can gobble that profit up right now and go, buy something really fancy. Or if my wife had her way, she'd just take it and go find something to buy. So I'm kind of at a crossroads. I've got 2 choices. I can consume that marshmallow, consume those profits, or I can hold off and use those for something else and hopefully get something bigger and better down the road.
Well, I got a question for you, Chris. I am not a marshmallow saver. Okay. I'm going to eat that marshmallow every freaking time.
You're not even going to nibble at it. You're just going to shove it in your mouth and down it.
It's not that I have no self-control. It's just, I just love marshmallows. No, but what would you say to somebody who says, you know what, I've never been good at that. That's never been a skill of mine. Does this disqualify me from, owning a business? What do you suggest to somebody like that?
That's actually a good question, because one of the authors of this study actually addresses that. And he said that ability to, have good willpower and self-control is something that's teachable. So they're concepts that you can learn and you can get better at over time. I think about me as a teenager, Chris as a teenager versus Chris now.
Yeah, I'd rather not think about that.
I had no self-control when I was a teenager. I remember, early on in life and, probably just before my 20s, going out and spending every last dime I had and going into debt to buy a sweet sound system for my old piece of crap pickup truck.
Obviously. Yes, we all knew. This would have been the 90s, right?
Yeah.
The subwoofers were all the
big
rage.
Subwoofer, yeah. As big as you could fit behind the seat. And you couldn't even slide the seat back all the way because it was so big. Yeah,
absolutely.
So, I did dumb stuff like that as a kid. And I feel like over time I have developed that self-control and gotten better and better and better at it. And so it's, just because you maybe haven't been so good at it in the past doesn't mean you can kind of change those habits and learn that and develop that and really make it a strength over time.
Yeah. Now, do we want to get into those tactics of how to develop that, or do you want to talk about the nitty-gritty of how much somebody should be saving?
Let's talk about the nitty-gritty. Let's talk a little bit about how much you should be saving.
Okay, and for what purposes? Because we've talked about there are all these line items, especially in your expense columns. In your expense column, you've got all these line items for, insurance and repairs and maintenance and on and on and on. Registration fees and whatnot. Is this how you kind of divvy up the savings, like looking forward to the future, or do you is there a bigger, grander plan even than that?
There's kind of an even bigger, grander plan than that. So what I have done is I've decided there's basically about 6 categories that you really need to be saving for really to set yourself up to be successful. And I really think this is the thing that creates a winner in a trucking company, is somebody that really follows these habits and is disciplined in this way. So, we talked a little bit about in some of the past episodes that, when you were a driver and you were an employee for somebody, all that earning that you made, all that money that came into your pockets, you could go and spend it. Well, you can't necessarily do that anymore. So one thing that I definitely recommend is that when you start your trucking company, you don't pay yourself any more than what you were earning prior as a driver. So you pay yourself that same driver wage that you were making before, but then the money that is the profit above and beyond that, that's what we're going to play with here, and that's what we're going to talk about. So I mentioned that there's basically 6 categories that I think you should save for, and I've created a spreadsheet that I use to kind of track that and help me. Of course I did. Yeah. You're going to bleep that out, right? Spreadsheet. You think that's a swear word?
Something like that.
Yeah. So anyway, I created a spreadsheet, and I'm going to put it on Motor Carrier HQ's website, and we'll link to it in the show notes. You can go to the show notes, learn a little bit more about these 6 categories in the show notes, and also find a link to that Motor Carrier HQ webpage where it has this. And I go into I've already created the webpage. We haven't posted it. It'll post about the same time this episode does, but it goes into a ton of detail about how you use it and how to develop those habits and how much to save. So, but we'll cover that now too. So why don't we just jump right into the categories, those 6 categories. Okay. So the first one is probably one of the most important and can be neglected, is maintenance and repairs for a truck. So, you're going to have months when you don't have any maintenance or repair issues with your truck, and then you're going to have months that you do. So what I have done is I'm setting aside money every month that goes towards that maintenance and repairs. Basically, it's kind of like, I'm treating it kind of like a savings account. So I've done a lot of reading in the past and read a lot of literature that talks about how much fleets on average spend in that maintenance and repairs category. And I've decided to use, based off of what I've read and studied and seen other people do, about 15 cents a mile.
So, that's interesting. So you've talked before about cents per mile, paying yourself as the driver. Now you're kind of paying the truck for the mileage it's going through.
Yeah, and on, I think, I want to say probably about 3 of these categories, if I remember right, are based off of how many miles you drive.
Oh, interesting.
Is going to determine how much money you save. And the spreadsheet that I created calculates all that for you.
Okay.
So the operations and the function of that spreadsheet is all going to be on that website. But for all intents and purposes here in the podcast, we're just going to basically talk about that. So I've decided 15 cents a mile, that's what I'm putting towards that maintenance and repairs category. So let's kind of use an example on that repairs and maintenance category. So let's say I drive 10,000 miles in a month, which is, a pretty common month. And if I'm saving it at 15 cents a mile, that means I'm going to set aside $1,500 for that month in maintenance and repairs. And if I had no maintenance or repairs issues in that month, that's how much goes into that savings category for maintenance and repairs. But let's say I did $600 in maintenance on my truck in that month. So then what I actually do is I subtract that from the $1,500. And so then I'm only going to transfer $900 because I had an actual expense of $600. I know I need to set aside $1,500. I subtract that actual expense out of the $1,500 and I just set aside the $900. And that spreadsheet that I've made kind of calculates that all for you, helps you figure all that out. So again, go to the Motor Carrier HQ website and you'll see I explain in really good detail how that functions.
So that's interesting. So you're setting aside that $600, let's say, whatever the regular maintenance is, new tires, lube change, whatever. Now you've got $900 to set aside. That's going into a longer term fund for like catastrophic things later on down the road. Mm-hmm. Okay. All right. Interesting. Yep. So it's not month by month. Oh, well, I only spent $600, so that's $900 to go blow in Vegas.
No, that's you're not going to go throw that on the roulette wheel. That's you're setting that aside because something's going to happen. I mean, that's kind of one of the things you have to get in your head, and it's changing that mindset again. Is that you've got that $900 that's just sitting there, but you kind of almost have to treat it like it's money that's already spent, that it's really kind of almost doesn't exist in the back of your mind. That money can't exist. You can't think of that as, oh, I'm just going to use that as my pot of gold that I can go spend for fun.
Okay, so what's next? What category are we tackling next?
So next is overhead. And I save about 4 cents a mile on overhead. And overhead are things like in a traditional business, overhead would be something like your rent that you pay. You just kind of your expenses that you have to pay just to operate your business. The biggest thing, one of the bigger things I plan on using that overhead category for is for my plates every year. You have to pay your registration, which is, it can vary depending on your state quite a bit, $1,000 to $4,000 just to register your truck. So that's one of the things that will go into that overhead category. Paying my accountant to prepare my taxes, probably another thing that'll go into that overhead category. There's probably some other things that haven't really thought of yet that might come out of that category as well.
Right. Okay. What else? What's next?
Another good one is, we've talked a little bit about insurance in the past, and you've got your insurance renewal comes up every year. And as part of that renewal, you actually have to put down another down payment. Every year you're coming up with an insurance down payment. So this one I've decided just to set a flat amount aside, $500 a month, that will go towards my next insurance payment that I'll have to do sometime in April of next year.
Because it is more predictable.
It is more predictable. And that $500 a month is actually kind of aggressive. So that'll translate into $6,000 in a year. I don't anticipate having to do any more than about a $4,000 down payment, but I'm saving a little bit more for a couple reasons, just to kind of be a little bit more on the safe side. And then also, if you can pay your entire insurance payment premium up front for the entire year, you save about 20%. They knock like 20% off,
nice.
Which is it's huge. I mean, you're talking like $2,000 to $4,000 in savings if you can pay it all up front. And I'm not going to be able to do that the first year or the second year, but if I keep saving a little bit aggressive, at some point I'll probably be able to make that full payment right up front, and that's a big savings.
This is you telling the guy in the lab coat, like, yeah, I can sit here and watch this marshmallow. Put 2 down. I'll watch 2, and then you give me 4 at the end,
there
right?
you go. Yeah, I like that.
Now, here's a question I've got. We've talked about the truck, kind of paying the truck, right?
Mm-hmm.
The mileage, but that truck eventually is going to wear out. Are you setting up an account or separate savings for a new truck down the road, or are you using the existing categories we've already talked about and eventually using that?
Nope, it's going to have its own category. So
Okay.
for both the truck and the trailer, that's kind of the next thing, is I'm setting aside $750 a month, either for my next truck down payment or my next trailer down payment. And that may be for a truck or trailer to replace my existing equipment, or I may decide, hey, I'm going to grow this and I'm going to add a truck, and that money can be used for that as well.
All right. And the last category that I can think of, you got to pay the man.
You got to pay the man. This is the category none of us want to talk about, but it doesn't do any good just to stick your head in the sand. So let's talk a little bit about the last category.
Okay, so how much am I putting away for taxes?
Taxes, it's kind of, that's a personal question and probably something you should decide in consultation with your accountant. But I'm doing 20% is kind of a round number, and you may not need to save that start saving that 20% right on month 1 or month 2 or month 3. I think what really is the trigger of when you start saving that 20% in taxes is when the company is profitable for the year. So if you go into the show notes, you'll be able to see Haulin Assets balance sheet. And so there's a couple things I want to talk about on this balance sheet. And since we're talking about taxes, let's talk about this one first. If you look at the very bottom of the balance sheet, the third row from the bottom is net income. And you'll notice my net income in May is a negative number.
Right.
And that's because in April was really the first month that I started. And, March and April, I was spending a ton of money just getting everything up and started. And so that's why that number is a negative, is because of all those startup expenses that I put into the business. So you'll see that in June, that number goes down. So it goes from 6,000 to 5,000 something. And then in July, it goes down quite a bit. That's where I made that $4,000 in profit. So every time every month you make profit, it it adds to that net income amount. Where my net income starts out negative, it's going to increase it until it turns into a positive number. Now, once it hits that positive number, that's when you're going to start to owe taxes, because that's when for the year you're making a profit. So that's when I'll start saving. As soon as I hit that month where that number goes into positive, then I'll save 20% of that net income amount and set that aside for taxes.
Okay.
That was kind of a long-winded answer.
No, that's fine. It's this is the sort of thing that deserves a bit of detail, I'd say.
Yeah, for sure. It's important. So the other big thing I want to talk about, so let's kind of go maybe line by line real quick through this balance sheet.
Well, can you define the balance sheet? Because this is different from the profit and loss statement that we looked at last week, right?
It is, yeah. And so your balance sheet is basically, for the simplest way to explain it, is kind of the net worth of the company. It's your assets plus your liabilities, and then that is what equals your owner's equity, or essentially kind of how much that business is kind of worth. And
so this is a static document versus the ongoing P&L that you're doing monthly. Yeah.
And the way your balance sheet typically works is a lot of times you'll take a snapshot at the end of the month. So at the end of the month or at the end of the year, this is how many assets the business has. This is how much debt the business has. Then when you subtract the assets or the debt from the assets, that's what shows you what your total equity is.
Okay. All right. So now let's dig in. You said you wanted to go line by line through a few things.
Yeah. So let's real quick. So we'll just look at May and use kind of May as an example. So you see, we started the month out in May with $6,781 in your checking account. So that's checking accounts, savings accounts, money that you have on fuel cards. That's all an asset. So you can kind of see all those assets lined out. I've got some petty cash. I have the savings account, and then you can see where I set up those savings accounts. And if you kind of go over to June, since I hadn't started putting money in them yet at the end of May, I started putting them in June. So what I've kind of done, and we may explain this a little bit more detail in a future podcast episode, but basically the mileage that I had in May and the profit, essentially kind of the profit I made in May, I moved that money into those savings accounts in June.
Okay.
So you're kind of if it makes sense, a month behind a little bit in those savings.
You are
because you need to know how much money you made in May
before you know how much to transfer.
Right, and you need to know how many miles you drove in May before you can transfer that money. So I transfer what I transfer in June is based off of the money and the mileage that I ran in May.
Right. Now that makes perfect sense.
So if you look at June, you can see that I added $211 into the miscellaneous savings account. In June, I didn't add anything into the maintenance account because that's the month that I did the repair from the deer that decided to run into the side of my truck.
You're never going to let that go.
Never going to let it go. No, I can't. It hurt my pride too much. But then you can also see, so I added $500 in the insurance down payment category, $750 into the truck down payment. And then if you go into July, you can see those accounts increased even more. And when we go into August and September, October, those are hopefully going to just kind of keep increasing.
Yeah. And before anybody's eyes glaze over, I just want to remind anybody listening, go to HaulinAssetsLLC.com, check out the show notes, follow along.
Yep.
Just like the last episode, make sure that you're following along so that these numbers make sense. I mean, you can listen to it first, but then definitely go check it out and listen to the episode again with that stuff in front of you. Anyway, sorry, go on, Chris.
So you can see that there. And so I'll go into, like I was saying, in a future podcast episode, we'll go into the nitty gritty details, like in QuickBooks, how I treat those accounts and how I make those transfers. I'll actually show you how I do all that stuff. But for today, we're just kind of trying to show the concept of how I'm doing it, kind of why I'm doing it. And then next time we'll go into really good detail of exactly how that stuff's happening.
Okay. Yeah, that sounds good. And so that'll be another episode to look forward to. The question I had for you, sorry, it looks like you're pointing at something. You want to go on with these line items?
Let's just look at the next one real quick because
Sure.
that'll finish off the assets. So kind of what we've covered so far for the most part are all those current assets. It's like your cash or cash type things. And then the next one, the big one, is the fixed assets. You'll see that's $113,000+. That's essentially the truck and trailer. Yep. They're
And you
both
get to
the
count
fixed
those
assets.
as assets even if you're still paying them off?
You do, because then you'll also list the liability, how much you owe down in one of those next categories.
You tricky math people with your tricky spreadsheets.
Yeah. Double, what do they call it? Double entry accounting. Yeah,
Nice.
Fun stuff. Exciting. Thrilling.
Okay, so let's go on with it.
Okay. Do you have that question?
Nope,
you
it
wanted to
can
ask?
wait. It
All
can
right.
wait.
Okay. All right. So now we'll kind of go further on down, and that's where you get into the liabilities and equity section. So the liabilities, obviously, that's like the debt, the things that you owe money on. So if you look at the end of May, I had an accounts payable amount of $3,218.95. And what that is I'm just kind of to simplify things here a little bit for me, and you don't necessarily have to do this on your own thing, but I'm paying myself as a driver one time a month, and I make that payment on the 15th. So that accounts payable is the wage I earned as a driver in May that I had not paid out yet, that hadn't actually left my account. That money will leave the account in June. Gotcha. So it's essentially a debt that the business owes to me as the driver. And then if you keep going down, then you'll see the trailer loan, a little over $41,000, the truck loan a little over $52,000. So I only owe like $93,820. I mean, that's not much, right?
Well, for a house.
So yeah, businesses, it's pretty common to have a lot of debt. So yeah, those are the liabilities.
Okay, all right. And so that gives us our total, right?
The 97,000 roughly is the total liabilities that the company owed at the end of May. Then you'll see that goes down, that every month after that it just goes down and goes down, because as we make those truck payments, as we make those trailer payments, that debt starts to go down.
Right.
And then the next piece is just the owner's equity. And the owner's equity is basically how much money we put into the business to start it. That's where that $32,100 comes in. That's our initial investment.
And that's what we talked about in that how much does it take to start a trucking company episode, right?
Yep. And then that net income, what we've lost, actually gets deducted from that because we've lost money. But as time goes on, and as we start to earn a profit, that owner's equity is going to increase, and we're going to hopefully increase our kind of share in the worth of the company.
Very good. Okay, so now let's talk about what these accounts are going to look like in the long term. If, let's say you're paying yourself, you said 15 cents a mile for maintenance and repairs, and say you bought a real good truck. You lucked out, you got a great truck, and you didn't spend nearly as much on maintenance and repairs as you expected to. And, the other categories you've mentioned you're being pretty conservative as far as how much you're saving for your insurance renewal, that sort of thing. And over time, these accounts are just going to get massive, right? You're going to have all this money saved up. Is that what we're looking at in the long term, is just sitting on a giant nest egg? Or is there something more that you can do with that?
Not necessarily. I think for the first year, you kind of really need to stick to this. And then at the end of the first year, you'll kind of reevaluate those accounts and say, you know what? I feel like I've got enough money in my maintenance and repairs account. I'm going to stop putting additional money into it. So kind of what I would use as a gauge for that is, what's the biggest expense maintenance and repairs wise that I'm going to have on this truck?
What's the worst that could happen?
Yeah, and it might be a blown engine, and you decide, what, if I get an engine that blows, that needs to be completely rebuilt, and it's going to cost me $30,000, then I want to grow that up till maybe about $30,000, and then once it hits $30,000, I just only set aside enough to cover the actual maintenance and repairs that I'm actually paying for.
Right. Okay.
And then you just got more money that you can put in your pocket or use for something else, or do whatever you want.
But for that first year, it's all about,
I think for that first year, it's building that up, because 90% of the companies that go out of business because of cash flow problems, because they run into a big expense like that and they don't have the cash to cover it. And so if you want to protect yourself and you want to make a strong business, you've got to put that money aside. That's what makes guys win in the trucking world, is their discipline like that, and they have that money.
Thinking long term.
You got to think long term.
Now, let me close this out with a really, really basic question, Chris. I assume we're not talking about mayonnaise jars, buried in the backyard. And then there's the other, we've talked about these different savings account. Is that literal? I remember when I was a little kid, my mom had the envelope system, right? Yeah. Put $5 in this envelope for, toys, and $5 in this for whatever. Is that the kind of principle we're talking about with savings accounts, separate savings accounts?
I haven't created separate savings accounts. You can do that if that's the route that you want to go, but QuickBooks can handle that for you. So I literally I've got a checking account at the bank, and I've got one savings account at the bank. And all that money gets transferred in that one savings account, but you can set accounts up in QuickBooks, like sub-accounts of that savings account. So that's essentially what I've got: a sub-account that's maintenance and repairs, a sub-account that is miscellaneous, a sub-account that's overhead. And you can transfer that specific amount of money into that specific sub-account, and it all falls under that savings account. And so the balance of adding all those sub-accounts together is what's going to be the balance that's in your savings account. And that's where, when I do that future podcast episode where I kind of really go into the nitty-gritty of how it actually works, I'll show how I make those entries into QuickBooks so that you can track those individually pretty easily.
Okay. Well, very good. That answers that question for me. Gosh, now I'm going to have to learn how to use QuickBooks. Sounds pretty good.
It's even more exciting than spreadsheets. You'll love it.
Okay. On that note, leaving on a dirty word note, spreadsheets. We don't talk about those. All right. So, Chris, I think we are good on this topic. Then we've covered what you're going to do with the profits that you are going to make if you are disciplined and have good luck. I guess that's part of it.
Yeah, there's always a little bit of an element of luck to it, but yeah, I mean, if you follow the things that we've talked about so far up into this podcast, I really, truly, honestly believe anybody can make money. Yeah. But you've got to follow those principles. You can't go out and buy a $10,000 cheap truck that's going to cost you $3,000 a month in maintenance and repairs. It's not going to work.
Hopefully you're all listening. I'm talking to the listeners here, not you, Chris. Okay. Hopefully you're all listening to Chris.
I'll turn my ears off.
He's a wise man. And we are kind of wrapping up our spreadsheet conversation, but we are going to be talking in the next episode about something kind of fun. We're going to be dipping into your military experience and gleaning a few business lessons from that. So that should be a fun episode.
I hope so. Yeah, we'll see.
We're gonna
stay tuned.
I would say we're going to let our hair down, but the military doesn't really let you.
We're going to crop our hair short for the next episode.
All right. So we will see you for episode 19. Thanks everybody for listening. Don't forget HaulinAssetsLLC.com to check out the full show notes. Don't forget to visit us on Facebook, where you can check out some very interesting posts that are going on right now. Some good conversation going on in Facebook. Just go find Haulin Assets there as well. Thanks again for listening. We will see you next time.
See you later.